Pittsburgh's biggest factory in the world shut down yesterday after 8,700 employees walked off the job.
More than 4 years, the automaker CEO seeming to break ranks with much of corporate America right now, delivering some harsh words about President Trump's tariff.
We're adjusting both our Mexico as well as our U.S. plants to make sure nothing crosses the border.
Ford didn't abandon America, but $3 billion in new production. It's being built in Ontario, not Detroit. Coca-Cola isn't broke, but your next can. It's more likely to be filled in Quebec than in Georgia. Alcoa never walked out. But U.S. aluminum exports are shrinking, and Montreal's port just beat Houston in outbound volume. This isn't a trade war. It's a surrender in slow motion. No headlines, no breaking news, just conveyor belts slowing down, just workers being told, not today. And the jobs? They're not going overseas. They're going next door to Canada.
Jim Farley, CEO of Ford, said yesterday at an investor conference that he would be in Washington today. The impact or potential impact of tariffs, if they were implemented, is a lot of cost and a lot of chaos.
Canada didn't storm the gates. They didn't wave flags or call press conferences. They simply waited and let America drop the keys. While U.S. factories juggled rotating blackouts, fuel price spikes, and utility bills that made CFOs sweat, Canada delivered one thing above all uninterrupted energy: clean, abundant hydroelectric power, flowing day and night, stable, scalable, and shockproof. For global manufacturers trying to forecast 10 years ahead, that's not just convenient, it's a lifeline. Meanwhile, Washington kept rewriting the rules, not just across elections, but within them. Labor laws changed. Environmental standards changed again. One year it's subsidies, the next it's penalties. Try building a 30-year plant on 2-year political cycles. Most CEOs won't even try. So where did they turn? Canada, where labor codes, climate commitments, and trade policy don't shift with the winds of Twitter or midterm elections. Where a permit isn't a political minefield, but a process. Where regulatory risk doesn't mean waking up to a surprise tariff on your entire supply chain. It's not glamorous, but in the world of global trade, calm is the new competitive advantage, and the numbers prove it. Natural gas from Alberta is now undercutting U.S. benchmark prices by nearly 70 cents per MMBTU. That gap isn't just a discount, it's a game changer for heavy industry and power-hungry exporters. Organic wheat from Saskatchewan, fully traceable and EU compliant, is replacing Kansas grain in European and Japanese contracts. Why? Because the boats leave on time, the inspections don't change, the terms don't slip, and hydropower turbines stamped "Made in Quebec" aren't just lighting up Canadian cities, they're running subway lines in Seoul, factories in Hamburg, and tech campuses in Tokyo. This isn't a price war. This is a trust shift, and Canada is winning it. No drama, no confrontation, just a steady stream of signed contracts, expanding deals, and export wins. Because in a world rattled by inflation, climate disruption, and political upheaval, investors, traders, and governments are asking the same quiet question: who can we count on next year? And the answer, more often than not, is Canada. Not because it's cheaper, but because it's stable, predictable, rational. That's not boring, that's powerful. And right now, that power is enough to quietly push America off center stage, one contract, one container, one supply chain at a time. So what happens when trust collapses, not all at once, but inch by inch? It doesn't start with protests. It doesn't make national headlines. It begins with a shipping label, a logistics reroute, a quiet memo inside the supply chain. And when those moments add up, you don't need a trade war. You get something far worse: a trade retreat. And Canada. It didn't win this battle with tariffs or threats. It won with something the U.S. no longer offers: stability.
A couple months ago, there was no way possible the Liberal Party was going to beat the Conservative Party in Canada. But then Donald Trump opened his mouth, and Canadians listened, and Canadians processed, and Canadians were like, we don't want anything to do with the United States. We don't want to be a 51st state.
Take Coca-Cola. No press conference, no controversy, just cold economics. The price of aluminum in the U.S. soared after import tariffs went into effect, up to 50% in some cases. So Coca-Cola ran the numbers and realized something brutal. It was cheaper and faster to shift canning operations to Ontario. That decision didn't just hit a factory, it gutted a whole ecosystem: packaging suppliers in Pennsylvania, trucking routes in Ohio, contract workers in Illinois. Thousands of people didn't hear a shutdown announcement. They just stopped getting called in. Next came Ford, and this one should have been a wake-up call. America's own motor company didn't leave the country. But it stopped expanding here. Instead, it poured $3 billion into its Oakville facility in Ontario to build its next generation of Super Duty trucks. Why? Because Ontario offered what Michigan couldn't. Reliable power, predictable labor, transparent taxes, no last-minute policy reversals, no sudden permit delays, no tariff surprises. And when Ford moved, it didn't move alone, it took with it contractors, freight carriers, and financial institutions. This wasn't deindustrialization. This was strategic repositioning away from risk toward resilience. Then there's Campbell Soup, an American staple for over a century. Their reasoning's simple. Aluminum costs were too high. Retail prices couldn't keep up with middle-class budgets. So they shifted their packaging to Canada without changing the recipe but changing everything else. American tomato farmers and livestock suppliers lost contracts overnight. And just like that, a single shift in packaging created a vacuum in rural economies that once fed entire counties. It's not just food, it's the appliances in your home. Whirlpool, GE Appliances, Kimberly-Clark. These aren't niche brands, they're daily essentials. And many of them are now being assembled in Canada, not the US. Why? Not because Canadian labor is cheaper, it isn't, but because Canadian infrastructure is smoother, lower energy costs, consistent trade policy, fewer political landmines. If you're running a multi-billion-dollar supply chain, you don't gamble on the unknown. You migrate to what's proven. And for more and more brands, that means north of the border. Even the building blocks of the economy are shifting. Alcoa, the pride of American aluminum, is quietly scaling back U.S. production. Factories in places like Texas and Indiana are dialing down output not because demand is low, but because power is expensive and unpredictable. Meanwhile, Montreal's port is breaking export records, shipping more aluminum than Houston for the first time in years. You don't see it on television. But if you're a worker on the factory floor, you feel it. First come fewer hours, then fewer orders, then silence. And then the tech frontier Tesla. It's still building cars in Fremont and Austin, but its brain trust is slowly crossing the border. Why? Because Canada offered something that even Elon Musk couldn't buy in the US. A clear EV policy, stable electricity, fast-tracked R&D approvals. So Tesla's expansion in Toronto isn't just a side project, it's a signal. If the future of automation, robotics, and battery tech can't find regulatory clarity in America, it will find it elsewhere. And Canada, with its policy consistency and clean power, just became the new base camp for innovation. Industrial collapse doesn't always start with sirens. Sometimes it begins with a contract left unsigned. No press release, no layoffs, just one word missing: renewal. That's how America is bleeding, not through defeat, but through disinterest. Corporations aren't announcing exits. They're quietly shifting procurement offices, legal teams, and distribution hubs. Because they no longer believe the U.S. offers predictability. And when predictability dies, investment follows. Canada didn't win this by being cheaper. They won by becoming less risky. No sudden tariffs, no revolving door regulations, no presidential tweets shaking the steel market overnight. In global supply chains, reliability is everything. And the U.S., once the symbol of that very word, has become a question mark. The danger isn't visible in GDP yet, but it's showing up in margins, spreadsheets, and skipped cities. Places like Pittsburgh, Akron, and St. Louis aren't losing factories all at once. They're losing the next reason to expand, and that's worse. Because when capital stays still or moves next door, what follows is stagnation. Not collapse, but irrelevance. A company that skips one investment this year might skip 10 next year. And when foreign buyers start seeing Made in Canada as the new standard, it's not just about product, it's about political risk premiums. The US isn't being punished. It's being priced out of its own reliability brand. This isn't a trade war, it's a reputational leak. And the hardest part, leaks don't explode, they spread quietly until it's too late. How much of America is still here? That's not a metaphor, it's a logistical question. Because every day another line on the spreadsheet disappears. Not from a crisis, not from a crash, but from quiet exits unnoticed, unlamented. Factories aren't shutting down with explosions. They're downsizing in silence. Investments aren't being rejected. They're just not being made here anymore. And while politicians argue over slogans, the decisions that actually shape America's future, where to build, where to hire, where to invest, are being made behind closed doors. And increasingly, those doors are in Toronto, Vancouver, Montreal. If Canada is where U.S. companies now go to escape volatility, to dodge trade risk, to find long-term reliability, then what's left anchoring them in America? Tax credits, tariffs, speeches. Because loyalty in business isn't forever. It's earned and re-earned through consistency, trust, and vision. And right now, those three things are being exported from the US, not along with its goods, but in place of them. So here's the real question. Who's going to call them back? Who's going to rebuild what was lost? Not in one explosion, but in thousands of quiet departures. Or will the label "Made in the USA" become something we only see in documentaries and old textbooks? A memory of a time when this country was still the most trusted place on earth to make anything. If this story made you pause, good, because it's not about blame, it's about reality. And if you want to hear more stories the mainstream won't cover, subscribe to the channel, turn on notifications, and leave a comment below. What part of your community is slowly fading without a sound? This isn't just economics, it's personal, and it's happening now. Let's talk about it before more of America quietly disappears.